The S&P 500 just closed lower by 0.3%. Stocks pulled back on Tuesday as the standoff between the United States and Iran over the Strait of Hormuz deepened, pushing oil above $83 and stoking fresh inflation fears ahead of Wednesday's Consumer Price Index report. Continued investor unease over Alphabet's ballooning artificial intelligence capital spending plan also weighed on the NASDAQ. NVIDIA moved, energy led all sectors, and the VIX held steady. Welcome to Invest from Zero, your daily U.S. market wrap. I'm here every single trading day to break down what happened, why it matters, and what you should be watching next. It's Tuesday, August 11th, and we have a packed show today. Here's what's coming up. We'll start with a deep dive into the S&P 500, then move to the NASDAQ and the Dow. After that, we'll walk through all 11 sectors one by one, so you can see exactly where the money is flowing. Then we'll spotlight the biggest individual stock movers in the mega-cap space, both gainers and losers, with our stock of the day getting a full 30-day chart review. We'll check in on a macro dashboard that means VIX, Treasury yields, gold, and oil. And we'll close with 3 specific things to watch before tomorrow's opening bell. If you're new here, this is the show that covers the U.S. stock market every single trading day. No fluff, no hype. Just data, analysis, and context. Hit subscribe so you don't miss an episode. Let's get into it. Let's start with the benchmark, the S&P 500. Today, the index closed at 7,728.20. That's lower by 0.32%, or roughly 25 points on the day. Yesterday's close was 7,753.11, so we're looking at a slight pullback. For the week so far, the S&P is up about 0.1%. The weekly trend is flat, which could break either way. These consolidation periods often precede a larger move. Now here's the context you need. The S&P 500 is the single most important number on Wall Street. It represents 500 of the largest U.S. companies and roughly 80% of total U.S. stock market value. When this number moves, it affects retirement accounts, pension funds, and investment portfolios around the world. To put today's 25-point move in perspective, the S&P 500 averages about a 20 to 30-point daily move in comm markets. Sellers were in control for most of the session. Breadth was negative. Now let's move to the other 2 major indices. The NASDAQ Composite, which is heavily weighted toward technology and growth stocks, lost 0.6% today, closing at 26,445. Tech underperformed today. The NASDAQ came in behind the S&P 500 today, and that relationship matters. When the NASDAQ leads, it usually means risk appetite is strong and investors are favoring growth. When it lags, it could be a warning sign that the rally is narrowing. Today, the NASDAQ lagged, which is worth monitoring going forward. The NASDAQ has been under pressure recently, and today's move was relatively contained. Moving to the Dow Jones Industrial Average, it finished lower by 0.34% at 53,792. The Dow underperformed the S&P today. Remember, the Dow only tracks 30 blue-chip stocks, and it's price-weighted, not market cap-weighted. That means a high-priced stock like Goldman Sachs or United Health can move the Dow more than a lower-priced stock, regardless of company size. The old economy names in the Dow struggled today. The key takeaway from the indices: all 3 are moving in the same direction, which shows broad conviction in the market. Now let's get into the sector breakdown. Energy stocks led the market as Iran's refusal to reopen the Strait of Hormuz until its demand were met kept oil prices elevated and directly boosted energy producers, while rising Treasury yields above 4.7% undercut yield-sensitive real estate investment trusts. This is one of the most important parts of the show because it tells you exactly where the money is flowing. Today, 4 of 11 sectors finished in the green and 7 in the red. Most sectors were red. This was a risk-off day. Leading all 11 sectors, energy up 1.2%. In second place, utilities at plus 1.16%. Third, industrials at plus 0.60%. These top three sectors are where institutional money was flowing today. The middle of the pack: materials plus 0.11%, financials minus 0.02%, technology minus 0.12%, and healthcare at minus 0.26%. Now the laggards. Consumer staples came in at minus 0.31%. Consumer disc at minus 0.36%. Communication at minus 0.50%. And bringing up the rear, real estate finishing down 0.7%. The spread between the best and worst sector today is 2.0 percentage points. A relatively tight spread, meaning sectors moved mostly together. Defensive sectors showing relative strength. That could be a sign of late cycle positioning or general risk aversion. I always say, follow the sectors. They tell you the story before the headline does. Now let's look at today's biggest movers in the megacap space. Starting with the number one gainer. Home Depot, ticker HD, absolutely climbed today. Up 1.05%, closing at $354.48. For a megacap stock, a 1.1% move in a single day is significant. We're talking about billions of dollars in market cap change in just a few hours of trading. Home Depot shares climbed on improving underlying business trends and pre-earnings optimism as investors positioned ahead of the company's second quarter report scheduled for August 18th, with analysts citing improving comparable sales in 9 of 16 merchandise departments. The volume will tell you a lot. If this move came on heavy volume, that means big players are behind it, and follow-through is more likely. If it was on lighter volume, be more cautious. If you own HD, congratulations on a great day. If you don't, the question is whether this move has more room to run or if it's already priced in. As a general rule, chasing a stock after a big up day is risky. But if the fundamentals support it, pullbacks can be opportunities. Rounding out the top 5 gainers. Number 2, AMD, up 1%, closing at $474.32. Number 3, ABBV, up 0.8%, closing at $250.09. Number 4, Meta, up 0.7%, closing at $599.12. Number 5, Caterpillar, up 0.7%, closing at $843.37. All solid moves in the green. Notice something here. These winners are spread across different sectors, which is a healthy sign of broad-based strength. Now, let's flip to the other side. The biggest loser today, Alphabet, ticker Google, dropping 3.84% to $343.80. Alphabet kept sliding as investors continued to digest CEO Sundar Pichai's decision to raise the company's full-year capital expenditure forecast to as much as $205 billion, a move that pushed free cash flow negative and deepened concerns about near-term margin compression. Context matters. One bad day does not make a trend. What you want to check is, has anything changed fundamentally? If the business is the same as yesterday, a down day might be noise. But if you see follow-through selling tomorrow, especially on increasing volume, that's when you should start paying closer attention. The rest of today's biggest decliners. Oracle dropped 3.7% to $145.48. Adobe dropped 3.4% to $263.71. Berkshire dropped 2.5% to $516.38. Amazon dropped 2.1% to $272.27. The average decline among our bottom 5 is 3.1%. Significant selling pressure in these names. Something is spooking investors. Selling pressure was concentrated in a few names rather than being broad-based, which is actually a healthier sign for the overall market. As I always say, a down day is not a disaster. It's part of the natural rhythm of markets. Every stock in history, even the best performers over the long run, has had days like this. The key is understanding whether anything has fundamentally changed and whether the thesis for these companies still holds. Time for our Stock of the Day segment. Today, that honor goes to Alphabet, ticker Google. Let's put this stock under the microscope. Google dropped 3.8% today, closing at $343.80. Now let's zoom out and look at the bigger picture. Over the last 30 trading days, the stock has ranged from a low of $317.69 all the way up to a high of $377.65. That's a 19% trading range in just 1 month, which tells you this stock has been relatively well behaved. Not too much drama in either direction. At today's close, the stock sits 8% above its 30-day low. The stock has room to run before it hits its recent high, which could act as a target for technical traders. This was the single biggest mover in our entire mega-cap watch list today. I chose it as stock of the day because when a name this size makes a move this big, it tells you something about the overall market sentiment and what type of stocks investors are favoring. If you're a long-term investor, days like this are noise. What matters is the quarterly and yearly trend. If you're a short-term trader, this kind of volatility creates opportunity. But as always, this is not a buy or sell recommendation. It's just data and context. Do your own research or talk to a licensed financial advisor before making any investment decisions. Now, let's pull up the macro dashboard. The 10-year Treasury yield climbed toward 4.7%, its highest level since January 2025, as the Iran-driven oil shock renewed fears that inflation could reaccelerate and force the Federal Reserve to delay rate cuts. Gold rose alongside crude as investors sought shelter from mounting geopolitical and inflation risk. This is where we check the pulse of the broader financial system. First up, the VIX. Wall Street's fear gauge closed at 15.3, falling 1.2% today. That puts the VIX between 15 and 20, a healthy normal range. For context, the VIX measures expected volatility over the next 30 days using options prices. This is a healthy VIX level. Not too scared, not too greedy. Markets can trend in either direction from here. Next, the bond market. The 10-year Treasury yield fell to 4.68%. That's above 4.5%, putting significant pressure on growth in tech stocks. The bond market is often called the smart money because it tends to price in economic changes before stocks do. When yields move, the stock market listens. Gold rose 1.8% today, trading at $4,440 per ounce. Safe haven demand is picking up. Gold is the classic safety trade. When investors get nervous, they buy gold. When they feel confident, they sell it. Crude oil gained 2%, sitting at $83.81 per barrel. Energy stocks should benefit from that tailwind. Oil prices affect everything from transportation costs to consumer spending. Putting it all together, the macro picture today is mixed. There are some cross-currents that could create volatility in the days ahead. Stay alert. All right, let's close with my watch list for tomorrow. These are the 3 things I'm tracking most closely heading into the next session. Number 1, Wednesday's July Consumer Price Index report, which will be the key signal for Federal Reserve rate expectations through year-end. Number 2, progress or breakdown in United States-Iran negotiations over the Strait of Hormuz and its direct impact on global oil supply. Number 3, Home Depot's second quarter earnings release on August 18th, which will reveal whether improving store trends have translated into stronger revenue. Write them down, set your alerts on these levels, and be ready when the opening bell rings. Preparation is the difference between reacting and anticipating. And that is your complete U.S. market wrap for Tuesday, August 11th. Today we covered the S&P 500, the NASDAQ, and the Dow Jones. We broke down all 11 sectors, went through the biggest movers both up and down, gave our stock of the day Alphabet a full 30-day chart review, checked the macro dashboard with VIX, bonds, gold, and oil, and finished with 3 things to watch for tomorrow's session. If you found this valuable, please hit that subscribe button. Turn on the notification bell so you get these episodes every single trading day. Share this with someone who's trying to learn about the markets. Drop a comment below and let me know, are you bullish or bearish heading into tomorrow? I read every single comment and try to respond to as many as I can. Remember, nothing in this video is financial advice. I'm just sharing data, analysis, and my perspective. Always do your own research or consult a licensed financial advisor before making investment decisions. I'll be back tomorrow with another full breakdown. Until then, invest smart, invest early, and invest consistently. This is Invest from Zero. Good night.